Okay. Since everything is ready for us. So, good week, everyone, and happy Easter for those of you who do celebrate it on this weekend and these days. My name is Vladimir Ribakov from Home Trader Club, and I am your guest analyst during April. So for those of you who didn't watch me for the last 2 weeks, very nice to have you here, guys. Or if you watch the recording, I hope you find it useful and valuable. And if you do, make sure you hit this like button below the video of the recording, and you follow Eightcap channel, because they are bringing for you every single month absolutely amazing and brilliant traders and analysts to present you their trading opportunities, their knowledge, and much more. So in this opportunity, I also want to thank Eightcap for giving me the chance to be here on April. And today's video, I have 4 interesting instruments, like I do every week, basically. To with the silver, DAX, and on the Forex instruments, that will be the pound franc and the franc yen, which I believe building up some really interesting opportunities for us. So we will go talk about all the technical conditions, what, why, how, and when. But before that, let's quickly take a look what do we have the economic calendar for this week. The last week was pretty busy, where the full focus almost went to the US CPI and the core CPI, which show what everyone was expecting to see, and even better, that the inflation rate pressure starts to slow down. Why is it so positive? Because the lower the numbers of the expectations, right, of the annual inflation rate, and even in the shorter periods, inflation rate, as soon as they start to go lower, that gives the Fed more freedom and more flexibility to slow down the interest rate hike pace, or maybe even stop it pretty much soon, according to the expectations and some sort of consensus among the analysts. 2024 should be the year where the rates will start to go down again, okay? Which supposed to remove some pressure from the people that pretty much suffer. And why they suffer, we saw what happened on last Friday. The retail sales and the core retail sales in US dropped dramatically. And it's not always, it's not only in the US, sorry, it's pretty much everywhere. The retail sales suffer, which makes sense. The higher the prices are, the less stable the market is and the economy is, the harder it is to go and to spend money. And people recently, in the last, let's say, year or so, are spending much less on, let's say, unnecessary purchases, right? So I can judge it by everyone, around me, around my surroundings. People are way more considering the advantages, getting something or not in a rush, like it used to be just before the inflation hit us all, where people just were spending and spending and spending, and then one day they just wake up like, oh, what's going on, right? Where is the money? So that's pretty much from the last week events. And this week we have several important ones as well. Today, we have, first of all, the European Central Bank President Lagarde speech. Then we have in Australia the meeting minutes. I will be paying attention to that, because in the last time, Australian Central Bank didn't do anything with the rates, but they said if we don't do nothing now, it does not mean we will not do on the coming rate decisions. So I would definitely be paying attention to that. That could have some impact on the Australian instruments. And China, which pretty much straightforward affects everything that happens in Australia, and not only also around New Zealand, but mainly in Australia. So these numbers could be also very, very, very affecting the Australian dollar and, of course, its cross pairs. Besides that, on Tuesday, we have the unemployment rate in Britain, claimant count change, the consumer price index, and the speech of the governor as well. No, that's the main events pretty much until Friday, where then we go with the retail sales in Canada. Pay attention to, again, I was mentioning before how retail sales and not only the US drop. Take a look from previous to the forecast. It's dramatic drop, about 2% here. It's very big drop. Yeah, that's we all start to feel it. So that's pretty much what happens with the economic calendar for this week. Now let's talk about the trading opportunities as we have them. So the first one, I want to go to the Forex instruments. That would be the pound franc. And here is what I see on this one. By the way, if you have any questions, guys, feel free to go and to ask. Or if you watch the recording, feel free to leave your question in the comment. I'll do my best to answer as soon as I can. Or you can directly reach me out in Home Trader Club for any questions you might have. Let's begin. I have 4 instruments to cover, and they are very exciting one. So pound franc, for me, it's an opportunity for a long-term trade. It's like swing trade to carry on with. And here is what we have. Let's remove this lines. So here is what we have at the end of these 3 massive waves to the downside, starting back then from the 2000s, even before, right? What starts to happen here 2 decades after that, we see the slowdown. While the market is still making the lower lows, the indicator clearly showing here higher lows, which means positive or bullish divergent sign, which in simple language mean that the sellers slowly lose their grip over this pair, and buyers will eventually take this momentum. It might take time. It does take time. I mean, this one is developing on the last decade, but for a longer view, the pressure here would be more to the upside, and as soon as the buyers are ready to take the control, this pair could be delivering. Now, why is it important? Because this is where I usually start to find my opportunities. Okay, I see that pressure on the long term. So, okay, it's definitely a good opportunity to look for possible trades to get involved in the buy direction for the long term. Now, going down to the weekly chart, and at the end of this recent weekly trend, where we got the sequence of the lower highs, lower lows. Okay? Look how it ends. The most recent low created here, where we got the temporary, I would say, president in UK and her tax plans, where the pound tanked to the downside. And look what happens with the condition since then of the technical indicators. RSI went below 20 to create a complete oversold conditions. The last time it happened was almost happened here, and the reaction, it was brutal rally to the upside, about 2,000 pips. So same happened here. It was the first leg to the upside. However, if we add on top of that, we add the monthly bullish divergence, my expectation is that this pair eventually would build up to corrective legs to the upside. How high can that go? Well, we have the falling resistance line, which could always be a dynamic target zone, but I have 2 zones of interest. First zone, of consolidation is right here. You can see how many buyers and sellers were fighting here for a long time. The next zone, slightly higher, is right here next to the falling resistance line. So I believe that once the buyers take the control here, we have an absolutely great opportunity to try and to ride this one. And going down to the daily chart, this is where I believe it starts interesting. We are right now in some sort of a bearish range or bearish channel. Okay? And there are two ways to look for opportunities with such technical condition. The first way is to plot about 10, maximum 20% deviation inside the channel, because market is not perfect. It's rare to see the market going and touching the exact trend line every single time. The market is not perfect. With that being said, that means we should consider as traders some zone of deviation. I personally work with about 10%. That depends how big the swings are. Okay, if there is a big room, I can allow myself go up to 20, but not more. And why it's important, because as soon as the market, the price enters this zone, I start to consider that, okay, we are in a reasonable, logical zone to start looking for the reversal signs. What reversal signs? For example, bullish candle patterns, candles that starts to make higher highs, higher lows, because when the buyers are back in the game, they manage to do what? They manage to do higher highs, higher lows. Okay, like every single time we got inside here, you can see that the market starts to make the higher highs, higher lows. Okay, here, then here. Okay, the flip starts to build up and happen. So that's definitely the signs I will be paying attention to on the longer term, and from there, potentially looking for the second big leg, according to the weekly and in the monthly chart, to develop and take the rally. The second option is go with the breakout. Whenever the breakout takes place, that simply means that we are leaving this comfort zone or the range zone of this pair, and the buyers are very likely ready to take off and push the price higher all the way to the levels mentioned before. So right now, the logical scenario, at least to me, looks like we are close to the bottom of the channel, and this is where I'll be looking for the possible buys. And this is the ideal scenario, because if we manage to catch this rally, usually the risk reward opportunity in such cases is way bigger than it is with a breakout. Now, the interesting part here, which I want to show you, if we drop to the 4-hour chart, look what happens here on the lower Bollinger Band. Let's just use here. Okay, so it loaded. Okay, look what happens on the Bollinger Band. That's one of the indicators I work with, and it gives me the view where the sellers or buyers are in full control, pushing the price through the Bollinger Band ranges for more than 20 candles straight. Once such condition starts to build up, the pressure is in the opposite direction. Now you can see what happened here on the last time it happened, how much pressure on the upside it pushed. Same here to the downside, and now the same happens on this condition. This is for me a very powerful sign, and that means that we are now entering the zone where the flip is very likely to build. Okay, and add that to the fact that the daily chart close to the bottom of the range, all the analysis we did on the weekly and everything, and we got a great opportunity here. So this is exactly where I start to look for the reversal signs and going for my bullish opportunities. So this would be the first one, right? The pound franc. The next one is the Swiss yen, which I also find absolutely interesting, and here is why. We cannot deny, let's just wait until the data here loads. Well, while it loads, you can clearly see we cannot deny the uptrend started all the way at this low. Okay, this was a second leg of a bigger trend that we have from the beginning of the 2000s. So what happens here is very, very interesting because the rally is so massive. See, it's still loading here the data, but let's use the current data. So this is what we are currently building up, and there are no signs yet it's over on the long term. Okay? If we take a look here on what's going on with the monthly chart, it's a clean sequence. Here we go, the 2000 I mentioned before. Okay, take a look on these swing highs, swing lows. It's still bullish, and the momentum continues. There are no reversal signs. And what do I mean by that? There is no flip of fake highs and lower lows. None of the trend line was broken or anything like that. So the bullish momentum is still here and still pushing. However, we do approach to a key zone here. You see what happens here? The RSI visited already on the overbought conditions on a monthly chart. Imagine the pressure that will be after that. So the next step is very likely to create some sort of a bearish divergence. While the market is making the higher highs, the indicator starts to hint that it's about to switch. The last time such thing happened was here, as you can see. Well, it wasn't really around the 80, but the same divergence was created here, and the massive drop followed since then. So I do believe that we are close to the top. Okay? However, I'm not yet confident that the top was created. I still expect to see the market doing something like that, okay, until the monthly and the weekly will create slower higher highs, while the indicator will make lower highs, indicating on a negative divergence. That would be absolutely powerful sign that the buyers are losing the momentum and sellers are very likely to take the control. So for the long run, I want to see this high, and then it's a very, very possible long-term sell. On a short run, I still, as I said, believe that the market has the reason to complete this rally, and I believe that what happens right now is we are indeed completing this rally. So a pullback and final push to make the weekly and the monthly highs is expected, and from there, something like that, okay, I will be, as I mentioned before, after sells. Until then, on the short term, I am after buy the dips. And if we take a look here, what do we have? We have classical three waves. Okay? At the end of these waves, we start to see also potential slowdown on the moving averages. Between the big swing highs, we have histogram bearish divergence. Note the RSI also, how it starts to indicate a slowdown. So very likely to assume that around this area. Also pay attention to the price. It's 150. We are next to 150. Round psychological number puts a lot of pressure as well. I believe a pullback is due, and we have a broken resistance that will behave as a support. We have ongoing rising trend lines which will behave as support, and I believe the price should visit first area or even as deep as the second area before taking the next rally to complete the daily and the weekly legs and prepare something for the long term. So for me, short term is buy the dips, even sell the very short term, right, towards these zones. However, it's, as you understand, much more aggressive because we are against the trend in that case. But this is how I see and how I view the Swiss yen. Okay, the next one on the list would be silver, and I love this one and everything it brings. So here is why. Yeah, let's quickly load that. So starting from the very high time frame, we did have here 3 bearish waves. We're talking about the 2010 and all the way down to 2020. And these 3 bearish waves ended up with a bullish divergence. You can see the same divergence I was mentioning before, the pound franc and the other instrument I showed you, right? So look at that. After eventually the pressure here took place and the rally is here. Okay, the corrective movement is taking place. So while the market was making the lower lows, the indicator started to build higher lows, and eventually the buyers take the control and make the push. Now, we did have the first leg, and right now I believe we should complete the second leg, because usually after end of the trend, like we did have between the 2010 and 2020, what happens in such cases is many times corrective structures. Corrective structures happen in 2 waves or ranges. So right now we did have the first leg, and I believe the second leg is here to complete itself. Okay, especially if we take a look on this range, it's breaking, so very likely to assume it has more to offer to the upside. So with this analysis in mind, I go to the lower time frame, and here is what I see. Okay, so we did have the break of this range, as we just saw, right? That's the one that we saw on the monthly, and we are building here the 2 waves. So very likely to assume, as soon as the market managed to make any pullback, that we should see the continuation upside. And with this view in mind, on the lower time frames, look what happens again on the Bollinger Bands. I showed it before, you can see it now. Every time we have massive, well, not every time, the market is not 100% reacting to indicators, but you can see how many times, once we did have such rides, how strong the price reaction to the opposite direction is. Okay? And right now we are right here, riding on the upper side of the Bollinger without significant corrective movements. The indicator starts to slow down here, which means the momentum is losing. RSI is overbought at the 20 classical conditions, and we are right here next to the supply area on the daily chart, all the way from February and April of 2022. Okay, so I do believe that we are building here some short-term pressure, okay, where a pullback should take place, and ideally it does, back to the supportive lines we have here, and from there, as mentioned before, I would be expecting to see further continuation upside. So on the short term, I could look again aggressive because it's against the higher time frame, but we could start to see here some slowdown, potential correction taking place, maybe one more fake high with a negative divergence, and then the pullback to take place, right? We have the supports here and slightly lower. All these levels should be acting as dynamic supportive zone. From there, once the bullish signs take place, again, I'm after the buys to join the daily and the weekly waves. That's the silver, a very interesting opportunity. And the reason I bring silver this week and not gold, because last week I've been talking about the gold and I showed my expectations and my levels on the gold, both the short term and the longer term. If you missed it, you can find the recordings of these videos on Eightcap Trade Zone and again YouTube channel, and you can see there the recordings of last Monday and Wednesday. So the final one for today, that would be our DAX, a follow-up, as we've been following this in the last couple of weeks. So what do I have here? I'm not going to analyze everything from scratch. As I said, you can watch the recording, but I do want to remind you that according to my analysis, I expect this high to finalize itself. It could be as a double top. It could be as a new high, slightly deeper, right? But I believe that this bearish divergence here would go and complete itself. And once it does, the long term here should be an amazing bearish opportunity. However, we are not here to talk about what could happen in the next several years. We are here on a short term, and you can see what starts to happen with the weekly chart. Okay? The first level, the price goes slightly above it. The next level is not far. Okay, the weekly chart also starts to build up the slowdown. So very likely to assume that around these levels, the DAX will start to put the pressure to the downside. Why it's important? Because in the last couple of weeks we were following by the dips. Okay? The idea was get the drops and get the push, and that's exactly what DAX is doing. It makes little drops and continuing. But now look what happens here. Okay, 3 waves. This is the push I'm talking about, and here are 2 very strong signs. Fake highs. Attempt to make a high, pull back, close below the previous high. Attempt to make another high, pull back, close below the previous high. Okay, such things are indication in most of the times that the buyers are losing control. Because think about the logic here. When buyers do take control, what happens? They make another high, they hold it, they push forward. They make the high, they hold it, they push forward. That's what happens when the buyers are in control. When the buyers are losing control, they try to make a high, sellers reject. They try to make a high, sellers reject. Try to make a high, sellers reject. And eventually, right, these trends flip, change, making lower lows, and then we follow with lower highs. So that's that, together with the weekly levels we saw before, puts the pressure on the bullish side. And I believe that we are not far from these reversal signs. Okay, and 2 zones I would be paying attention to. We saw the first one is the 61's Fibonacci's expansion of these 2 legs. And the next one is not way further. It's right here. It could slightly make this final push and finalize that, right? But you can see that the whole pressure from all the time frames and the signs of the fake highs, it's something to pay attention to. Okay, the 2 levels. And then on the 4-hour chart, you take the most recent rising, supportive line, take the lows, and as soon as the reversal flips and happens, we can understand, okay, very likely sellers take place, and then sell the rallies could be our opportunities. That's the DAX. Very interesting instruments we've been following for the last couple of weeks. It did the beautiful rally that we expected, and now it's approaching towards the key zone. Pay attention to these levels. These levels could go and put some significant pressure and create the reversals on the coming days or weeks. It's a longer term analysis, so it could take time. So that would be all for today's video, and the preparation for the week. We would have a follow-up and maybe more interesting opportunities. Depends how the market develops on Wednesday in a live webinar we have there. So I would like to take the opportunity and to thank you for being here, joining me. I hope you find it useful and valuable. As I said before, don't hesitate to ask any questions in the comment section, recording of this video, or reach me out directly in Home Trader Club. That will be it. Enjoy your day. Enjoy your week. I wish you a good one. All the best to you and yours. And thanks to Eightcap once again for making it happen. I'll see you soon. Bye for now.